Europe's Stoxx 600 index is expected to post gains north of 14% to finish 2011 up around the 321 level. Starmine estimates earnings growth of 15.9% for the index as a whole. In this show, I'll look at sector valuations and profile 5 of the best honeypots and 5 of the worst value traps for the Stoxx 600 in 2011. Let's kick off. We look at the index overall. We can see we have a very strong uptrend in place. We're using cloud charts, which can give us a very long-term perspective of the trends in the market. We can expect a bit of a brief retracement of this market because we're moving into Q1 January retracement, February low, support around March around the 274 level, but currently strong uptrend. If we now look at the automobile sector, we've had a very strong trend in this sector. We can expect a bit of a retracement. We need to see a bit of a consolidation of this strong price move. Support can come back into the market here around about the cloud at 340, between 325 and 340, we could see some support coming into the market. But overall, very strong trend in this sector. Basic resources is the next sector we're looking at. Overall, very strong trend here. Support here should come in around the 585 level. Technically, we need to see a bit of a price consolidation period here, so we could see a base forming around the 600 level as well, as the market's going to probably sell off January, February a little bit to start a new rally back in March. If we now look at the chemical sector, also trading at very attractive fundamental valuations. Once again, very strong uptrend in place. Look how the cloud is supporting the price here. Once again, support can come back into the top end of the cloud, maybe at 561 in this market, but overall chemicals, strong uptrend. Industrial goods and services is the next sector that's trading at very attractive valuations. Here we can see, once again, very strong uptrend in place. Nice thick cloud that acts as support. The price here is a little bit extended, so we can see a technical retracement of this recent move back down to about the 318 level, where the market could find support and then have a Q1 and Q2 rally moving into the next year. Industrial goods and services is the next one. Oh, sorry, oil and gas is the next one. Where we've had a bit of a struggle here, slowly at a change in trend. We've got support at the top end of the cloud here. Support should come in at the 327, 330 level for this market. But once again, oil and gas in a very healthy, strong uptrend. We need to retest the highs of the cloud on this level here to see if it's going to break further. But overall, oil is in a much stronger trend. If we now look at the value traps, where we've looked at the valuations where these sectors are a bit extended on both a PE basis as well as enterprise value and EBITDA multiple basis. So we could see some significant price corrections in Q1 in the following sectors. Food and beverages. Once again, very strong uptrend, which the angle of the attack here of this trend is going to be a correction back to about the 361. It's going to be interesting to see if the stock's going to find support at the bottom end of the cloud here, but this sector is slightly overvalued on a enterprise multiple basis. Personal goods and household goods is the next sector. Yeah, we've got a very strong uptrend for a very long period of time. We need to see some form of consolidation. If one can imagine a 30 to 40% retracement of the entire move, we could see the market sell back off to about the 400 level to find support at the top end of the cloud. But once again, bit extended, so watch out for a correction in Q1 in this sector. The retail index is next, where we could also expect a bit of a retracement due to extended valuations. Yeah, this sector is somewhat struggling. We can see it's somewhat moving sideways, not particularly favorable price action, and it would appear that this sector is somewhat going to roll over now, and as the cloud's going to roll over, the price is going to dip below the cloud should act as resistance for the sector going forward. The real estate index is the second last one, which is still somewhat in trouble. We can see here we've had a bit of a strong uptrend in place, somewhat of a consolidation period taking place now. We can see this entire area of consolidating moves. We've made a double top here. That's the first top. That's the second one. It's going to be interesting to see if the price momentum can stay above the cloud, but somewhat I expect this index to retrace a little bit because the valuations are slightly extended. Last but not least, the banking sector, which is very interesting, even though, yeah, the sector's got very attractive relative valuations. We consider the fundamentals of this sector to be slightly poor, and investors should get accustomed to the fact that maybe the banking index is now trading at a much lower overall valuation multiple. Yeah, we have a very strong downtrend in place. Look for the cloud as resistance, but the banking sector is now clearly in a downtrend, and valuations is a bit rich considering the fundamentals. So that's my look at the honeypots and the value traps for 2011 in the Stoxx 600, and watch out for those January retracements. I'm Richard Miller, and this is Reuters.